Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you and a very happy Monday. In today's program, I want to really sort of basically discuss pretty much what I was discussing this morning, but in a little bit more detail. And talk about just very briefly, a certain court case which is on the horizon. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. There, I said it. And of course, know the risks at hand before entering any trade. With that out of the way, let's get to it because there's plenty to go through. So yesterday's program, I basically called it the US dollar, the president of the currencies, and I've actually changed it. I've upgraded him to King. So all hail King Dollar, because yes, we're seeing a lot of dollar strength, and the reason for that, or main reason for that, is fear is gripping the market. Because obviously we had that very good job data on Friday, which has given the market the impression that, of course, the Fed will indeed raise interest rates at the end of the month by 75 basis points. And there is general fear that by raising interest rates so aggressively and so quickly, that the US economy and the global market in general won't be able to handle it. Because don't forget, all the economies have been addicted to low interest rates and free money. So yeah, this is the concern. In fact, Wells Fargo actually sees a recession hitting the US in mid-2023. Now, their chief economist, Jay Bryson, he says, in our view, the recession will be more or less the equivalent in magnitude and duration to the downturn of 1990 to 1991. He goes on to say that recession lasted for 2 quarters with a peak to trough decline in real GDP of 1.4%. So yeah, so that is, again, many banks have come out and said they've predicted recession, but this one, say Wells Fargo, has actually said they think it's going to be the same to what happened in 1990 to 1991. What else is scaring the market? Well, as I mentioned this morning, there was going to be a press conference from Shanghai about COVID restrictions. So then again, yes, the market's now getting more scared because we're going to think, they're thinking they're going to see more lockdowns happening in China because of the sort of COVID outbreak. And China, don't forget, they have a zero tolerance policy towards COVID. So they're being extremely strict. In fact, the number of citizens now in China under COVID-related restrictions has risen to 114 million. 114 million. What else is scaring the market? Well, again, I mentioned this morning about Nord Stream. Okay, Nord Stream 1, which is being closed down for maintenance. And like I say, this is standard. This happens at least once a year anyway. But the reason why it's scaring the market is that because of the Ukraine war and the sanctions that the EU, the UK, the US, and most of the developed world has put on Russia, they're worried that though they're turning it off for maintenance, they won't turn it back on. And that obviously EU is heavily dependent on gas coming from Russia, especially Germany. I remember I said beforehand, 40% of the gas the EU takes comes from Russia. So there is a big concern that this is going to push the EU over the edge into recession. In fact, the survey conducted by Bloomberg of the economists shows the probability of economic contraction has actually increased to 45% from 30% previously. So yeah, there was really big fear, and this Nord Stream 1 situation is not happening. So what is the upshot for that? Well, euro dollar parity is in sight, is very much in sight. So let's have a quick look actually at the market now. Let's have a quick look at where the euro is at the moment. So this is, again, let's have a look at you. We'll come back to this one because it's the dollar yen. Yeah. Hang on, here we go. We are so close to parity at this very moment in time. It's currently trading at 1.00646. And like I said, they are levels not seen since December 2002. 2002. So it's a lot of pressure on the euro, and it's many people, myself included, to be fair, not like this is financial advice in no way whatsoever, but we now just think it's just a matter of time till it finally hits parity with the US dollar. Those who don't, not in the know, parity is when it hit 1 to 1. So $1 will equal one euro. Okay, so there we go. Yeah, huge amount of pressure. If we look at it on a daily as well, okay, you can see the RSI is slightly under the 30, but it's not dramatically under the 30. So it's not giving me like a clear indication that it is oversold. So we might see a reversal. We might see a little bit of buyback at some point, but at the moment, I can't see any buyback happening at the moment. It's still under an awful lot of pressure, 1.00640. So yeah, it's only a matter of time. I think many people think that this is when it finally reaches parity. Like I say, we might not hit parity today. I don't think it will be today. Maybe, depending on, on some economic data coming out, and I'll talk about that later, that could push it over the edge to parity. But yeah, watch out for some of the dip buying as well. We might see a bit of dip buying on its way down. So that's something. Let's have a quick look at the cable, British pound, US dollar. Yes, again, that's around a 2-year low at the moment, trading at 1.19005. So a lot of dollar strength again against the cable. Like I say, dollar is king at the moment. And if we look at the dollar yen, this is on a 30-minute chart, currently trading 137.66. So yeah, dollar strength across the board. Let's have a look at one of my favorites, which I always talk about. Obviously, it's gold, currently trading at $1,737 an ounce. It's just above this key level of interest I've been watching. If I put on daily, okay, around 127.02, which is a key level I'm going to keep an eye on there. So yeah, let me see, dollar strength across the board. What else is happening? What other stories are there, James? Well, surveys again. Bloomberg loves doing its surveys. In fact, they've done a survey today, well, not today, but recently, over the last day or so, on a large number of investors in Wall Street. And this survey has shown that the large majority of them sees Bitcoin crashing to the $10,000 level, obviously because of risk aversion, risk off. In fact, 60% of the 950 investors surveyed, 60% of the 950 investors surveyed see Bitcoin going to 10,000 rather than 30,000 again. 30,000 again. So they see it going to 10,000. So again, they're quite doom and gloom on Bitcoin. Let's have a quick look at Bitcoin now as well, while we're at it. Here we go, Bitcoin. Okay, trade. I mean, this is the level we've been watching lots. Range band really still trading around that $20,355 currently as it stands. So that's where it is. The RSI is in between 70 and 30. So again, not indicating either oversold or overbought at the moment either. So that's Bitcoin. So what else? What else to talk about? God, there's so much to talk about. So much to talk about. I need water because my throat's getting so dry. Oil. Excuse me. Oil is under slight pressure now as well. Again, because several reasons. One, obviously, the China lockdown concerns, so slowdown in demand. That's affecting oil prices. Plus, President Biden visits Saudi this week to discuss with them to increase oil production. So again, trying to increase supply. So you've got demand waning and the hope that Saudi Arabia can actually start increasing supply of obviously oil. So that's having an effect on oil prices. Let's have a quick look at oil. There it is. Oil currently trading around just above $101 a barrel and 29 cents. So yeah, we have seen a bit of pressure. So last week it was under pressure, but then supply concerns gave it a boost. But now because of Biden's visit and because of China lockdown issues, we're seeing it slightly under pressure again. And as it's trading around $101 a barrel and $101 a barrel and 27 cents. So yeah, that's something else happening as well. Okay. Let's move on to another story. So many stories today. So many stories. The other story, which is interesting, I've discussed this a fair bit as well in the past. Okay, a couple of weeks ago, and that's Twitter. Okay, basically, Twitter has hired a crack legal team to get 1 billion from Mr. Musk for him walking away from his 44 billion takeover of Twitter. Because obviously, don't forget, you might have remembered there was a huge argument about a month ago where Musk was claiming a lot of accounts were fake accounts. Twitter said it had only 5% fake accounts. He believed it was a lot higher. So that's what he's saying, basically. His excuse was he believes it was higher. Many other people think he just got cold feet and walked away from the deal. But anyway, so that's the reason. So he's pulled out of that. So this court case is going to be quite interesting to see what happens and how dramatic it is. I don't know if it's going to be as dramatic as Johnny Depp's and Amber Heard's court case, but still be quite interesting to see how this develops. Let's have a quick look at Twitter, because Twitter will be interesting to watch when the US opens in about just over about 10 minutes or so. Let's have a quick look at Twitter as well. Okay, currently trading at 36.93. Be interesting to see where it opens on the back of this news, and the back of obviously, risk appetite being off the table as well. So that would be very interesting to watch. So currently trading at $36.93. So, bring it up. So, sorry, I've got to tap it, bring it up. So this is where it is at the moment, $36.93. So it'll be interesting to see how that develops with that story of this imposing court case. Okie dokie. What else? Okay, well, there's lots of things coming up this week. Lots of events coming up. Okay, don't forget. We have the Bank of England Governor Bailey speaks again tomorrow. He didn't really say anything of any interest today, to be honest, to give the cable with the British pound any strength. UK GDP, Germany CPI, US CPI, interest rate decision from Canada, US retail sales, and Michelin consumer sentiment. But guess which one? Guess which one I'm really excited about? The one I'm most excited about, and the one I think the market is holding its breath for. And that is, of course, the US CPI, Consumer Price Index. And because of that, I'm actually going to be doing a watch along to this event on Wednesday at 12:20 p.m. UTC. Please come along and join me and watch it with me. The expectation of it is 8.8%. I know this morning the consensus said it was 8.7. Now that consensus has changed. It's now gone up to 8.8%. So yeah, please come along and join me. I think this is going to be, I think the market is really looking at this, especially after the good job data we had on Friday. They're going to watch this like a hawk. If it comes in at 8.8 or even higher, then the market is really going to start placing heavy bets on a 75 basic point hike by the end of this month, maybe even more. So what else is happening, as well as something else which is important? Earnings season begins on July the 15th. Earnings season begins. So this is going to be quite interesting. The market's going to watch it because, last two quarters, we've had very negative earnings coming out from a number of very large corporations. So this starts this week. The one starts mainly banks this week. We have JP Morgan Chase with their earnings, Morgan Stanley, Wells Fargo, Citigroup, all basically they get the ball running and the start of earnings season begins with those banks. So, okay, how's the market currently stands? Well, the FTSE's currently trading negative 0.13%. DAX currently trading negative 1.04%. Euro Stock 50 currently trading at negative 0.35%. So, yeah, there we have it. A really big week ahead of us. A lot of stories. The China story today, the Nord Stream story, which will be interesting to watch, see how that happens. That's close to 10 days, don't forget. So it'll be really interesting to see if they do turn it on. In fact, actually, in relation to that, the German finance minister did a conference with one of the ministers from Czech Republic, saying, they did a joint statement saying that they are very worried, extremely concerned that the gas supply to Europe is being used like a political pawn. So, yeah, there is general fear on that. So that's going to be interesting to see how that develops. China, more information of the lockdowns coming from that. And obviously, at the moment, clearly, we're seeing a lot of dollar strength. Don't forget, you can ask me questions anytime you wish while I'm live on air. Is there any questions at all? Anything anybody like to ask me? Or just simply want to say hello? Say hello there, which is my line, of course. Okay. Well, don't forget, if you think of a question later, don't forget you can put it in the comments on either Facebook or YouTube. I do see them. And as always, I always answer the question when I'm back online for the next broadcast. So please feel free to do that as well if you can't think of a question, when I'm live. But like I say, please feel free to ask me anything as I'm live on air. Okay, as there is no questions, not a problem. Don't forget, I'm back online again tomorrow at 8 a.m. UTC to do the European session. And again that day, same day, at 1 p.m. UTC or around 1 p.m. UTC to do the afternoon US session. So please come and join me for that. And as I always say as well, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you've enjoyed this episode, click subscribe if you like. Hit the notification button so you know next time I'm going live. If you've enjoyed this episode and found it interesting and insightful, and you put up with me and all my enthusiasm about the market, give me one of those. It's nice to know that these videos are being liked. I see I've got 3 likes already, which I really appreciate. I appreciate it. I really, really do. Anyway, till next time, or till tomorrow, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.